On the morning after Britain's vote to leave the EU, I asked the question, just how bad could Brexit be? The shock to the financial system was as violent as was projected, given most everyone incorrectly predicted the outcome of the referendum. Yet having digested the event, the rally in stocks is building for a second day with some vigour. Why is this? There is plenty of animosity in Britain over the outcome of the vote. With 2020 hindsight, I'd argue that the referendum question itself was wrong. It should never have been a question of remain or leave. Rather, the people of Britain should have been asked, on what basis do you want to do business with the European Union? Indeed, that very issue is now likely to dominate negotiations with the bloc going forward. German Chancellor Merkel may well have stated that Britain cannot cherry-pick throughout the negotiation process, and that mobility of labour is a precondition of doing business within the single currency area. Businesses based in England are now starting to put some meat on the bones of what might happen if Britain rejects out of hand the freedom of mobility that Merkel points to. They will start to leave an ex-EU Britain. But the Leave camp won the vote because more Britons were tired of doing business with the EU in its current form. That is a resounding message to EU politicians, and it is one that likely resonates with voters in France, Germany, Italy, and any other EU nation. There is a tremendous amount at risk to European trade if the bloc wants to play hardball with Britain. For example, shutting Britain out of the single trade area using trade barriers would result in similar British treatment of Ireland, which is extremely reliant on exports to Britain. How acceptable that would be to Brussels is not the point. The point is that the Irish would be questioning the benefit of remaining in the single market at all. The status quo did not suit the majority of Britons. The reality is that the scare story of leaving the EU, despite its warts, frightened those voting Remain to accept the unhappy alliance as it is. In the immediate aftermath of the vote, investors felt that Britain was severely hampered. However, maybe what they are realising is it is an EU problem that will require conciliatory action over hardball. What the equity market may be telling us is that the common market could find common ground as the picture emerges from Britain in the coming weeks. That's all from Traders Insight for now. For more, join us on the web at ibkr.com/ti.